ins and outs when it comes to how that home policy is going to be input into place. Some parts are very similar. They're both going to have the liability protection, and they're both going to have your stuff, right? So the home protection. Some of the policies that are out there now, as you're kind of looking and comparing those, in order to cut prices in a very price sensitive market, they've reduced coverages in ways that most people wouldn't typically understand.
Okay.
So a normal home claim, like if there's a fire in your home, the way that it's going to be settled is they're going to look at your home and they say, all right, we're going to pay you, the first payment that you're going to get is a depreciated value, right? Your roof is 10 years old, it's not worth, so maybe it was $40,000 to put on, we're going to give you $20,000 for that.
Yeah.
And the same with everything else in your home and all of your contents. The first payout typically is that depreciated amount.
Mm-hmm.
And then you have to go through and justify essentially that larger value for the replacement.
Mm-hmm.
There's policies that exist out there now with different carriers that parts of the home will not be, they'll say, oh, it's a replacement cost policy, but then parts of the home will not be replacement. Some of them will say, all right, your home's new, but if we're not going to pay for your new roof, even if it's a total loss. We're going to give you the value of what it was at the time of loss, or carpets, small things, or the small line items within the policy that once laid out are very frustrating at the time of loss.
Got it.
So I would say that most renters policies pretty consistent. Like there's not big differences in renters policies, like from company to company. It's a pretty standard policy. When it comes to homeowners policies, what's covered, how they calculate that replacement cost, whether it's going to be, what you're actually, the money you're going to get if you were to make a claim, that can vary a lot.